Okay, friends, welcome you today's class. We'll continue our discussion on working capital management. In that context, cash management part was almost over. I'll be sharing the screen with you. Let me first share the screen, and before that, some specific doubts has been asked. So these doubts are relevant. So let me explain you. This is what doubt was there. Hearing. Yeah, are you able to see the screen now?
Yes, sir.
Okay. So we are learning working capital management. In that context, cash management we are continuing. So we'll try to complete that cash management portion today. And if time permits, we'll go to inventory management. But before that, the query which has been sent by Rosalie through email, let me address that query fast. Some specific doubts have been asked. These doubts are regarding this maximum permissible bank borrowing. So let me just go to that level what has been talked to you. Any other specific doubt you have?
यस सर सर थ्योरी से कुछ डाउट था
इसमें किससे?
थ्योरी पार्ट में
अच्छा, theory part में if you can send the specific questions, we'll be addressing. First, let me clarify that specific question which you have asked. Then we'll be completing this cash management. Then time permits, I'll be asking you the theoretical questions. If possible, we'll address all your doubts. Right? Okay. So regarding this
ओके सर
various kinds of committees, in the previous class we have studied this Tandon committee report. This report deals with what is by using the suggestions of this committee, we will be able to find out what is the maximum permissible bank finance. In that context, I had taught you
यस सर
that three methods are suggested by Tandon committee. Okay, by using this method, banks can decide, or also can know, customer can know what is the maximum permissible bank finance. What is first method? Maximum
यस सर
permissible bank finance is 75% of net working capital gap. Working capital gap means current asset minus current liability. That is my working capital gap. 75% of this will be funded by the bank or can be funded by the bank maximum. And what is remaining 25%?
which will given by the other
Customer will give or customer will arrange some other finance, not working capital finance. Maybe long term finance they can arrange. Okay, right?
यस सर
Now coming to second method. Second method it says will arrive 75% of the current asset that will be financed. From that, entire current liability will be deducted. That is second method. Right? Third method suggests that 75% of current asset netted off with core current asset. That means current asset minus current liability will find it out, and 75% of that will find it out, and from therefrom current liabilities will be reduced, and that will be the maximum permissible bank finance. So bank will be financing 75%. Okay.
यस यस सर
On that basis, we have calculated. We have solved these questions also in the previous class. Right, we have calculated maximum permissible bank finance is 75% of this, like this. Three questions we have solved. First method is suggest 660, second method 510, third method 225. Okay,
यस सर
actual funding is more than that. So therefore the difference should be arranged through long-term funding. Okay, it may be phased out gradually, or it may be some long fund borrowing sources may be used for the differential amount. But this is the amount which bank should form through working capital finance. This was our understanding. Okay, is it clear to you, both of you? Okay,
यस सर
it is clear.
यस सर
Okay, now the real query came that when you solve the question in your study material, this was the question in the study material,
यस सर
right?
यस सर
This is the question. this company has furnished the following cost data. It says sales is this much, material consumed this much, direct wages this much, factory overhead 100% variable, office and administration overhead 100% variable this one. This is the sales and cost structure the company has given. Have a look at this,
Yes, sir.
right? Okay. Now, company wants to make the forecast of the working capital needed for the next year. Okay, it has given some projections. Sales will go off by 100%. Selling expenses will be 150 lakhs. Stock holding for the next year will be raw material 2.5 months. That is raw material holding period. Work in progress period is for 1 month. Finished goods
1 month.
book debt for 1.5 months. Lakhs in payment. That means creditors holding period will be 3 months for creditors, 1 month for wages, half months for factory and office administration. All this data are given to you. And what has been asked? Prepare a statement showing working capital requirement for the next year.
Capital.
Okay, and calculate the maximum permissible bank finance. And this is the last part where you got stuck off. You feel that maybe solution in the study material is wrong. So we'll find it out whether that is wrong or wrong. Right? We'll find it out. First, we'll see. We'll estimate that what is the projected cost, what is the projected profitability. These data was given to you. Sales was this much. Right? All of you are seeing this. And question
Yes,
C will
sir.
be 100% increase. That is new sales will be this much. Similarly, direct
Yes, sir.
materials consumed will be 100% increase. So like this, on this basis, this will be the cost. Sales will be this much. These are the cost. Finally, total cost will be this much, and we are expecting or we are projecting that future profit will be 150. Right?
Yes, sir. Yes, sir.
And accordingly, we have calculated what is the monthly sales, what is the monthly cost, what is the monthly profit. All these things we have computed. This divided by 12. By dividing the annual figures by 12, we have also found what is the monthly
Month.
monthly amounts. Right?
Yes, sir.
Okay. So here I think up to this there is no query. Now we are going to compute the working capital requirement for the next year. So as question says raw material will be for 2.5 months. So we have found the amount. Work in progress consists of raw material, direct wages, factory overhead for 1 month, 1 month, 1 month each. So we have taken it. We assume that direct just overhead and raw material costs are 100% consumed. Okay, in previous some examples we have assumed that labor cost is 50% consumed, but here we are assuming entire thing is 100% consumed. Finished goods we have seen 0.5 months, 15 days. Right, debtors figures also we have arrived 1.5 months. So on that basis we have computed total current asset will be 250, 240.
240.
It is clear, right? Now
Yes,
current
sir.
liabilities. Yeah, any doubt?
No, sir.
Okay. Now current liabilities on the similar manner we estimated creditors are like this. How much is the creditors? 75 for 3 months. Is it not? Creditors are three
Yes,
months.
sir.
Then wages are for one month. Factory overhead 0.5 months with 15 days. Office administration expenses 0.5. Selling and overhead 0.5. Right. So total it comes to 96.25. So net working capital is that current asset minus this 96.25, it comes 143.75. So we could estimate the current assets and current liabilities. Okay, and net working capital could be estimated.
Yes.
Fine, fine, right. Now here your doubt, you have sent this snapshot through mail. Your doubt is like this: current asset, current liabilities. Okay, we have computed working capital gap. We know. Right. Now, how
Yes,
should the
sir.
maximum permissible bank finance? So, your question is that why they are deducting here 25%, whereas you have been taught that it should be 75%. Is that the query?
Yes. Yes, sir.
Subsequently, also here also you are deducted. You have shown it beautifully. You have explained that why this is like this, why this is 20%. Here also again you have sent me this photograph to me that why this is 25%. All these cases, your question is that why it is 20%. I understand this is a fundamental question, it needs to be clarified at this level. Right? This is the query. Okay. Now,
Yes, sir.
friends, try to understand what we are computing. Maximum permissible bank finance. Maximum
Yes, sir.
permissible bank finance is 75%, which is in different kind of formulas. It has been
Yes,
explained
sir.
75%. What exactly the question is doing, right? What is it? Minus 25% for long-term sources. That means question is saying that 25% you should bring from long-term sources. Don't bring it from working capital. From working capital loan. Okay. Meaning indirectly saying this is 100%. If you deduct this minus 25%, ultimately you'll be getting 75%. Okay. Let us solve this question in a different way. Okay. Now let us solve the question in a different way. Study material has solved the same thing in a different way. So first what we'll write, you see current asset is 240, current liability is 96, working capital gap is 143.7. Right?
Yes, sir. Yes, sir.
Now how study material it has solved? Minus 25% of the long-term sources, that is 35.94 is to deducted,
Yes,
then maximum permissible bank finance is 107.81. This is option
yes,
1.
sir.
Alternatively, what we can do, maximum permissible bank finance is directly 75% of the working capital gap. This is working capital gap. You take 75%, same answer you will be getting.
Sir, 143.75 का 25% 35.94 आ रहा है.
Yeah,
तो
yeah. What is your
फिर
question?
current liability.
Yeah, please repeat your question. I couldn't hear it clearly.
No, sir, I'm getting. I got it.
You got it now? You see that
Yes, sir.
directly you use your calculator. Let's say I'm also trying it. 143.75 into 75%. Suppose you directly do, it is coming correctly 107.81. 107.81, you can check it in the calculator.
Yes, sir. Yes, sir.
Okay, same thing.
Yes, sir.
Okay. So this is how we have to understand. The 75% will be provided. Bank can allow through working capital finance. Remaining 25%, either the client or the customer can bring as equity or through some long-term sources or some other plan. Now we'll see the second, because here the under first method formula is 0.75 of current asset minus current liabilities. Study material
Yes,
has
sir.
deducted 0.25 and arrived at 0.75. We are calculating directly 7.5. You are expected to be familiarize yourself with both the ways, right? So that you'll be able to do it. Second formula you see. Second formula is 0.75 of current assets minus current liabilities. Okay.
Yes, sir.
Here what we are
Yes,
doing,
sir.
first our current asset is this much,
Yes, sir.
right? Minus
Yes,
25%. Study material has done minus 25%. So 60 of this, right? You have understood it differently. In your question, you have asked, you see, 64 you have taken. Why 64? It should be 60. You have written here,
uh, yes, sir. That may
not
be.
64, it should be 60. So, what the study material has done, it has done correctly. 240 minus 60, it comes to 180. Or directly I can take 75% of the current asset, 180. Okay. So, I got 0.75 of current asset minus current liability. Minus current liability is 96.25. So, finally, how much I am getting?
83.7.
83.75. Right? It's correct?
Yes, sir.
Okay, fine. Now, third method we will see. Third method, read the formula here. What is the formula? Can you read it?
75% of current asset minus core current asset minus current liability.
Liability. Same thing we are doing. Total current asset is this much. Core current asset given in the question is 30. So
30
current
lakhs.
asset
Yes, sir.
minus core current asset is 210. Right? 210. In study
Yes,
material,
sir.
what has been done? Minus 25% of the long term sources. 25% of 210. right? So you're getting 52.5. It's saying you should arrange from long-term sources. So balance, what is balance? Balance is 75%. Either I can directly
Yes, sir.
calculate 75% or deduct 25%. So I'll be getting
Yes, sir.
157.5, right? So this will be actually
Yes, sir.
150.5 should be this thing, 75.75 of current asset minus core current asset. Then minus current liabilities. Therefrom, current liabilities will be deducted. I'll be getting maximum permissible bank balance is 61.25. Is it clear to you?
Yes, sir.
Okay, now
Yes,
you've
sir.
understood. It has done correctly in the study material, and that
Yes,
is another way only it has been presented. So there is nothing wrong. You please familiarize yourself in both the methods. Okay, now treasury management we had started in your previous classes, and all these things I had explained you what is about the cash management. Yeah, at this time, if you have some theoretical question, please ask. I'll try to sort it out. Then I'll be entering into new areas. Any specific
sir. In various form of cash holding slide, what are the cash?
various forms of cash holding? We had covered that thing, no?
Yes, sir.
Yeah,
Yes, sir.
yeah. Like cash in the normally, as let us say hard cash or in bank balance that can be kept, or any other form which is readily convertible into cash that is also equivalent to cash. So we have covered that thing. Any doubt there?
Yes, sir. I have doubt from that.
Yeah, tell me what is the doubt?
Sir, last point में था एक लाइन that fixed deposit are held for twice period. ये twice क्यों लिखा हुआ है?
What is written? Fixed deposits. Okay, you see this question.
Are held for twice period.
No, you see, I'm unable to understand this question right now. You do one thing. Have you sent me that question? You do one thing.
Okay, sir.
Take a photograph and WhatsApp me. WhatsApp me or mail me.
Okay, sir.
So by underlining the area which you are unable to understand, so I'll be able to explain it. If any this kind of theory questions are there which you feel it is difficult to understand, then please send me highlighting those portions. I'll be able to explain. Okay. So now let us move forward.
Yes, sir.
Take the way you ask this question that by sending photographs, if you send like that, it will be very easier for me to explain. Well, friends, now coming to this cash budgeting part, we have understood various kinds of models regarding cash management, is it not? Miller and over model we have covering this Baumol's models also in the previous class we have covered, and then in that context we have understood cash budgeting also relevant. And I had just mentioned that there are three methods of uh, preparing cash budget, like receipt and payment method, adjusted income method, adjusted balance sheet method. So quickly we'll try to go through all these three methods. First is receipt and payment methods. Here what happens? Expected receipts and payments are considered. That means we expect or we do a budget. We try to estimate what will be the receipt in future years and future period and what will be the payments. How we will be able to estimate? We prepare various kinds of functional budgets. Like for example, if sales budget is prepared, we'll be able to know how much money will can be generated from sales. Out of that sales, some revenue can be generated through you can say credit sales. Some of them might be credit sales, but net that means the total sales minus credit sale, you'll be able to find out what is the cash sales. Is it done? So
Yes.
so cash inflows can be computed like this. Similarly, by using purchase budget, by using various overhead budgets, we'll be able to know what is the inflow of cash, what is the outflow of cash, and we'll be able to prepare cash flow budget for a specific period. Right? If there is some cash accruals, not cash accruals, if some let us say income accruals or expenditure accruals, that doesn't affect cash budget. Right? Suppose sales, let us say credit sales. Credit sales will not affect our cash budget. Or let us say expenditure accrual, accrued salary, accrued payments, they are not going to affect our cash budget. Okay, only when only cash outflows, actual outflows or cash inflows will be affecting our cash budget. Okay, so by using digital payment method, we will be able to compute or prepare cash budget one way. Another way is that adjusted income method. Here, cash flows are computed by adjusting the sales revenue and cost figures for delay in receipt and payments. Here, what we do, we compute what is the sales. And we know, let us say sales is 5 lakh rupees. We know out of this 5 lakh rupees that there will be delay in receipt. Or out of 5 lakh rupees, 1 lakh rupees will be received after some time. 4 lakh rupees will be received during our period. So by adjusting that in our cash budget, you will be taking only 4 lakh rupees. Similarly,
Yes,
payments,
sir.
delays in payments are adjusted, and by adjusting these delays, we prepare what is the we found out or we compute what is the inflows, what are the outflows, and we will be able to compute a cash budget. Okay. Then adjusting balance sheet method. Here, what we do, budgeted balance sheet is predicted for each item, the assets and current liabilities as a percentage of expected sales. If you know this is the sales, suppose we know this person will be sales. Okay, from the sales, we compute out of this sales, let us assume 20% will become debtors. Fine. So 20% will be debtors. 20% of the debtors will remain means 80% sales money will be collected.
Yes, sir.
So that will help me in preparing my cash budget. Similarly, I will say let us say purchases. If I know this is the purchases, I can assume 15% of the purchase will be creditors. That means 85% will be collected. 85% will be has to be paid in cash. That will be cash outflow. So like this, with the help of balancing, we try to estimate cash inflows and outflows. That is called as adjusted balance sheet method. And these are some
Sir, in
areas of cash
15%,
receipt. Like yeah, please repeat your question.
सर अगर डेप्टर होते हैं तो फॉर एग्जांपल 20% डेप्टर है तो 20% हम कंसिडर करेंगे या नहीं करेंगे?
No, I couldn't follow. What is your query? Here in this method, what happens? Yeah, repeat your query.
सर इन सेकेंड मेथड
Second method. Okay, right.
एडजस्टेड इनकम मेथड अगर 100% सेल्स है क्रेडिट सेल 20% है और बाकी 80% कैश सेल है तो
Yeah,
वो जो 20% क्रेडिट सेल हम कंसिडर करेंगे या नहीं?
yeah, definitely consider करेंगे. We are preparing cash budget. Credit sales helps us to arriving at the cash sales. Here, what we do, total sales is this much. If I know this much will be my credit sale, then balance is my cash sale. So this is how we will
सर
considering. Will considering means credit sale will help me or debtor balance will help me to arrive at my cash sales. Okay, is it clear?
यस सर
Okay, fine. Now you see these are the receipt areas. Can you read some of the receipt areas from where we receive cash?
from debtors and sales.
Debtors realization, sales realization, then other sources, miscellaneous income like dividends, etc., recovery of loan. Payment areas like purchases, expenses, okay, payments which are made periodically. So we need to estimate the amounts for each of these items. Then only we'll be able to prepare the cash budget. This is the format what we do for every month. We find out first opening balance, then you see these are the receipts. Please read out the receipt items here.
Collection from debtor, cash sales, loan from bank,
Yeah,
share capital,
yeah.
miscellaneous receipts, and other items.
So every month, let's say we are taking opening balance here, then all the collections we are taking. Right. So total is this. Total receipts are this. Okay. And this is next page we'll be writing payments. Payments, these are you see payments to creditors, wages, overhead, interest, all these payments will be writing here for this one. So receipts is there, now payments are there. Total receipt, total payments. So balance is closing balance, we can find it out. Opening balance plus receipts minus payments. This is the closing balance, is it not? Okay. Are you listening?
Yes, sir.
Uh, if this is the closing balance, next month, in the May month, what will happen? Next month, again, that closing balance of April will become opening balance of May. Opening balance of May. But how to arrive at the closing balance? Opening balance plus all these receipts minus all these payments will be getting closing balance. After that only we'll go back to the opening balance.
Yes, sir.
Right?
Yes, sir.
This is how cash budgets are prepared. Here is a question. So what we'll do, it will consume some time. So I am just showing you this question. You can, okay, let us discuss this question. We will not do it. Other questions I will leave it, but this question let us quickly discuss. Uh, can you quickly read this question?
Prepare a monthly cash budget for 6 months from April 2018 on basis of following information.
Right.
Estimated monthly sales are follows. In January, sales 1 lakh, February sales 1.2 lakh, March it is 1.4 lakh, and in April sales is 80,000. May it is 0.6 lakh,
Okay.
and
So
June
this
it
is
is
some
0.
sales data for various months: January, February, March, April, May, June, July, August, September, October. How many months? 10 months sales data is given to you. Right. Next is wages and salaries data is also given to you. April, May, June, July, August, September. How many months data is given to you? 6
6 months.
6 months.
right. Of the sales, 80% is in credit, 20% is in cash. So monthly, if you know the monthly sales, we can find out how much is cash sale, how much is credit sale,
Yes, sir.
right? Then 70% of the credit sale will be collected within 1 month. That means suppose January is credit sale, we can know what is cash balance. 20% is the cash sale, maybe uh, cash sale on sales 80% is in credit, 80% is the credit. Out of this 80%, 75% again will be collected in the next month. That means in February you'll be getting 75%. Balance in
Yes, sir.
balance in 2 months. That means March in another 25% you'll be getting. There is no bad debt losses. Similarly, purchase amounts to 80% of the sales. We can understand that. And made and paid for the month preceding the sales. So if this is the sales amount, we can find out 80% of that is purchase and that has to be made paid in the previous month. Farm has 10% debentures of this month. Interest has to be paid in this month. That this will also affect my cash outflow. Farm has to make advance tax payment in July. That will affect in the July budget. Farm has a cash balance and the opening balance as a this thing, which is the minimum desirable level of the cash balance. Any cash surplus above or below this thing should be invested or liquidated like this. This is the question. Okay. So just to have a brief idea about the cash budget, I am explaining the answering process. What we'll do first, we'll see how much is to be collected from debtors. So this data is given to you total sales and different months.
Yes, sir.
10 months data was given is total sales. Question says 80% of this is credit sales, so 80% is credit sale.
Yes, sir.
80% of this. Okay, and out of this 80%, 75% will be collected in the next month. So February,
Yes,
75% will be collected here. Okay, this is
yes,
75%. This is 112, 75% will be collected in the next month, in the month of April. Okay, like this. Understood? So this is 72 is
Yes, sir.
yes, sir.
75% of 96%. This is how 75% of the previous months will be collected. Our remaining 25%. So 96, 75% collected in March. Remaining 25% will be collected in April. Right? It says in the second month. You see these two taken together, 24, 72 is equal to 96. Similarly, 28, 84 is equal to 112. 1648 is equal to 64. Are you understanding?
सर
Are
सर
you
ये
getting?
सेकेंड वाला भी थोड़ा कंप्लीट
What the question says, you see, this is the credit sale, right?
कर यस सर
From of
यस
the credit
सर
sale, 75% of the credit sale will be collected in the next month. So 75% of this 72,000
यस
collected in the next month. And the remaining,
Yes.
means another 25%. Another 25% collected in the second month. Second month means this is after 1 month, this is second month is another 24,000 is collected after two
Yes, sir.
months. Okay. Similarly, 112 is the March credit sale. 75% of this is collected in April and 25% of this is collected in May.
Yes, sir.
Like this for every month you have to collect. You have to see this slide, this video. You can pause this video and watch at home. I can find out this is how collections are arrived at. So after that, I say my total collection in the month of April is this month, May is this month, June is this month, July is this month, August is this month, September is this month. In the 6 month, this is my total collection. Okay.
Yes, sir.
April, March data is given to you so that you can arrive the complete data, complete cash collection from debtors for the month of April. To calculate this thing, I need 2 months prior data. Therefore, that data was given. Right.
Yes,
So
sir.
after that, opening balance was given to you. Cash sales, you can find out 20%. Collection from the debtors in the month of
Yes.
April is this much. Total cash available is
Yes,
this much.
sir.
Then purchases 80% of that thing you can find it out. Okay, salary and wages, all these expenditures you can find it out. Now you see total there is a deficit of surplus or deficit you can calculate it here. This is surplus. If it is surplus, make it temporary investment. Question says always there will be a closing balance of 20,000. So keep 25,000, 20,000 rupees as the closing balance. Okay. And
Yes, sir.
next month again 20,000 will be my opening balance. Then all the sales inflows, then payments, then again temporary investment you make. Keeping 20,000 as balance, make temporary investment. Next month, you see again that is 20,000 is opening balance. Final here, this month the deficit. You need some cash, so liquidate temporary investment. The investment that you have made is liquidate, you'll be getting cash and maintain in such
Yes,
a
sir.
way that closing balance is 20. So closing balance will be always 20, opening balance will be always 20 because question says that is the minimum desirable limit.
Okay, sir.
Okay, this is how cash balances can be kept. Cash budget can be made. Understood this thing?
Yes, sir.
Yes, sir.
We have to close shortly because time will not permit us. This is one more question. So you can later on in free time you can just read this question. It will take some long time. It may not be required for your syllabus, but still to have a brief understanding.